Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal. I thought I'd do a special deep dive today, which is Saturday, the January 13th, and because I've got some time that I'd just simply go through a particular market that I wouldn't normally do, but if I have time on a Saturday, I'll do one. So here's sugar, the market I'm going to be looking at. ETF is CANE, C-A-N-E. We've got the short-term trend to the downside, no surprise there, but the longer term trends, they're still pointing to the upside despite the sell-off that we had latter part of last week. So we have a mixed bag here when it comes to the trends. The technicals are also a little bit mixed here, but it's the seasonal tendencies that are popping up here and a pivot low that is popping up here. And those are the things that I really want to focus on. If we take a look at the pattern deep dive, here's cane sugar down here. We had a high stretch that occurred 4 trading days ago. That's what the 4 represents. So I want to sort of give you a picture, and then we'll take a look at the graphic here. So here is sugar, and this is on daily bars. You can see going back to July of last year, the market has been in a sideways trading range. We have resistance up here, which we hit a couple of, well, maybe about 4 or 5 days ago, and we've got a massive amount of support here. These cyan colored dots represent 4 different segments. We've got one right here, which has a strength of 17. These are hard numbers to see. This one right here, the second one back, has got 27. We got a 33 all the way through here, and then we got a 50. And each of these cyan colored support levels are just that. They're support to the market, and there's a tremendous amount of support when you combine all of these together individually. So think of it as a really thick marker, and what it's doing is it's telling us that there's a lot of support to the market, just as there's a lot of resistance to the market that has been built up here since July of last year. But eventually we're going to break one way or the other. I just want to show you that I think, for the most part, that there's going to be a continuation here, but it's based upon some different types of analyses. First thing is that we had an elastic level, as I pointed out, pivot low, and so that's a foreshadowing that the market's starting to put the brakes on, and we'll probably find some support at one of these 4 levels. Hopefully the first one right through here. The support level in this case is 1365. Now, if we take a look at some of the targets for the market, here's the 1366 level. You can see that there's a fair amount of resistance from those multiple levels that we're looking at. We just looked at a daily chart, but this chart, this upside and downside targets, this takes into account multiple time frames. So we got an intraday, we got a daily, and we've got a weekly. Combine all those together, and what we're trying to do is to find out where the support is on multiple time horizons. So with the market having closed at 1418 on Friday, we have a little bit of support, very small, but we're sitting on it right now. If it should fall, we're going to find there's a support gap, meaning there is no support to the market, hence the gap, and then it'll be really easy for it to fall to any of these particular levels that I'm pointing out right here. If you want to take a look at these numbers in real time, next week or for any market, all you do is you just simply come to signals, you come down to market targets, and you can find any market in particular. I'm just simply pointing out that there's a gap if we should break the level we're at right now, but there's a tremendous amount of support. Now you can see the strength, which is what the S stands for. The 74 adds up the different time frames that are in that vicinity, and the higher the number, the stronger the support, and the C stands for count. How many individual support levels are there? In this case 2, and then we sum up the strength to both of them, and that's where the 74 comes from. We have 114 strength, and we have 4 conditions, very strong, and then below there, that one level we are looking at, we've got support strength at 82, and we have 2 conditions based upon those multiple time frames. Now, what's going to basically take place is that our systems are short the market. We've got 5 systems that are short. We get a 60-minute, 45-minute, 120-minute, 45-minute, and one daily. Now these just got into trades, and they're all profitable with the exception of one. And net, we've got a nice little open position profit of 1,200. But we're going to most likely, if we see the market do sell off a little bit more on the early part of next week, then we should see the systems start to liquidate themselves. Now this is why I'd like to see them liquidate, is the seasonal tendencies. This seasonal chart, you can see that we've got 5 years, 10 years, a combination up to 15, 20 year, 20 and 30 years. But the one that I primarily look at is the 10 year. You can see that right now we're at a level where the market typically sees a little bit of strength. We're there right now, or at least we will be in the early part of next week. And then there'll be a surge into the remaining, say, 20 some odd days or so. So when we combine 5 and the 10s and the 20s and 15s together, we come up with a seasonal projection. And the seasonal projection, using all of those time frames, will take an average, give a little bit of a weighting in there, but basically an average. And what it's doing is it's pointing that the market should be on a seasonal basis starting to head higher. So we've just recently had a pivot low in the elastic level, which is often premature by a day or so, 1, 2, 3 days or so. But it's a foreshadowing that the market should find some support. I just pointed out the support levels. This might be off by a day or so as far as the timing, and this simply looks at all the different time frames and doesn't take into account weekends and holidays, because it's just simply coming up with a projection. So it's not saying that it's going to mirror this exactly. It's not saying that whatsoever, but it's saying that the seasonal tendencies are bullish more so than bearish over the next 21 days, which is what this seasonal outlook is all about. So with having said that, what I would anticipate is that the systems will liquidate themselves here fairly soon. And if I can pull up this one chart here, which is where we have the pro alerts, which is kind of the pattern-based systems. I mentioned that we had, when we first started here, a stretch that had triggered. That's what this magenta crosshair was. It's further back in time, so they're not showing up anymore. But we had tightrope, and we had another signal here was a surge high. So you can see that the market did trigger these things, and the market did sell off. I think what we're going to see is if we come down to the support levels that I was referring to, and the seasonal start to kick in, and that pivot low in the elastic level really starts to mean something, that we'll start to get some numbers, or we'll start to get some alerts here on the positive side. And then what we should theoretically do is go back up and test that support level, or excuse me, that resistance level that we see through here, these 3 levels that we have right through here. So that's kind of where we stand right now. We're still short. We're still looking for the market to find some form of a base into early part of next week. Then the seasonal tendency theoretically will start to kick into gear, and we'll be able to flip out of our shorts and into either a flat position or actually go long the market. So for right now, as I mentioned, we've got the 5 systems. I would encourage you to, if you're a premium user, continue to watch over this very, very closely. If you are a basic investor or basic subscriber, you just come down to sector signals, and then on the right hand side, since sugar is in the soft sector, you just click on softs. Then you'll have full access to this as a basic member, and then you'll have the profitability here. You can see that we have a nice profit, because in this case we're taking into account a weighting for that of the S&P 500, so that we have a legitimate comparison. The fact that it's this dark gray means that we've got a number of systems that are short, and the profitabilities are always going to be shown at the bottom. Doing very well in coffee, and we have a hedge. You can see long 2, short 2 in cotton, and we got a nice little profit going on there as well. So let's see what does take place with all of these markets, but specifically with the market we just reviewed with sugar, and we'll take a look at another market to early part of next week. Thanks for watching.